In today's video, we're going to take a look at TLT and the next immediate decision. Now, one of the things that I'm going to share with you first is that I did actually have a grouping of about 5 Fibonacci timing cycles that came due the week ending December 2nd. And guess what? We really did not put in a low or reversal around December 2nd. So that was a bust as far as that grouping of time cycles. However, we did have one cycle at this most recent low, and it was from a major low-to-low swing. So low-to-low, 100% in time, came in December 16th. And then the only other thing that I had there was an extension of a prior low-to-high swing. So not an awesome setup, but there were things that were coming together that told us to look for a possible counter-trend bounce. Now, we also saw that on the daily charts, where you'll see that let me show you where we had the timing here. So we had timing on the histogram for a possible counter-trend bounce. And then we also had, extensions on the daily chart where moves tend to terminate. So we did start seeing a nice rally from that low. We took out some important resistance initially, which told us to look for at least a deeper upside correction. But now we're at the next major decision. Okay, so the question is to fail or not to fail, because now this current rally is very similar to a couple of these prior rally swings, and that's where the next resistance decision comes in. And this is the way that I have to look at it. If you took the counter trend buy and you're up into this resistance, one thing that you need to do is tighten up your stops, okay? Because this is the place where it has the chance to fail. Now, you may not get stopped out. We might end up blowing through this resistance and we might see a continued rally. But just in case we don't, tighten up those stops. But what else can you look at here? Well, if we don't clear this resistance, can you look at a potential short in TLT? And the answer is yes to that question. But what you want to see if you're going to do that is you want to see a sell trigger. For example, if you're going to look at a swing trade against this resistance, typically you're going to look at a 15-minute or a 30-minute chart, and you want to see the moving average crossover to the downside, or some sort of, good sell trigger that tells you that it's worth placing a bet against that zone. And then if you do place that bet, remember where your risk is defined. Your risk would be defined then either above the high made prior to a sell trigger firing off, or above the high end of the zone, which is going to be this 122.92 area. Okay, so that's how we take this market from one decision to the next.